Hey guys, it's Eddie here from DilleenProperty, and today I'm going to do a quick video talking about what's the last 5 years of growth like. And the reason why I'm doing a video about this today is because it's a very common question that I get asked all the time, and I'm going to share my thoughts on it today. Quite often I'll show a client a property, or I'll be talking about property in general, or one of the most recent buys we picked up for one of our clients, or for myself, and they say, "Oh, that's amazing numbers. What's the last 5 years of growth like?" And they're essentially, what most people are doing, they want to find out what the last, years of growth like is, because they think, the past 5 years indicates what's going to happen in the next 5 years. And from my experience, this is something that you've got to really identify and I guess take with a grain of salt, because there's different factors that come into play. Just because a property has had, say average growth for the last 5 years doesn't mean the next 5 to 10 years is going to be the exact same growth. So if anything, I've got the whiteboard here, and I want to, share, I guess, show you a simple thing, a simple example, I guess. And right now, I live in Sydney, and it's 2018 right now. So for the past, between 2014 to say 2016 onwards, or 2013 to 2016, Sydney's had amazing growth. It's only the last 12 to 18 months where it's really kind of plateaued a little bit in most areas, and obviously there's markets within markets, so it's a very broad statement to make. But over the last, say, 5 years, Sydney's had a lot of growth, right? What most people forget about is that the 5 years previous to that, Sydney did basically nothing. So if, say for example, if you were to buy in Sydney, say for around the year of, say, 2010, right? So say if you bought in Sydney around 2010, and I bought about an hour and a half north of Sydney in 2010, that property before then, before 2010, 2005, basically did nothing. It might have, usually property markets will go like flat, up, flat, up, flat, on general. Some people say it's more like this, it was a market cycle, and then, obviously a 10-year period, capital city will go through a boom on average. Sometimes it can be more, sometimes it can be less, etc. But there's lots of different equations in there. But say for example, if you're only aiming for properties that you've got that have had amazing growth in the last 5 years, if that's one of your things that you really want to look at and is really important to you, say for example, you bought in, say this is like 2013 in Sydney, and say this is 2018 right now. If you want to buy in Sydney right now, it's basically, at the top of the market. So technically speaking, Sydney's had amazing growth the last 5 years. But, what usually happens in terms of growth in market cycles, usually go through a market cycle for 3 to 5 years or more on average, and then it'll go flat or stagnant, or have, fluctuations of, between 5 and 15%. Overall, depending on the market and the markets within that. But if you're only aiming for growth that's happening in the last 5 years, you're really limiting yourself, because most likely major cities like Sydney and Melbourne, they're going to be stagnant for a few years to come before it goes through another market cycle and then takes off again. So what I look at in terms of building a property portfolio, are markets that maybe right here, or just right now on about to go through a market cycle. Timing is very important. Also, time in the market is most important as well. So you've got to kind of, it depends what your goals and what your strategy is for investing in property. But what I've learned, I guess, is how many properties can you take through market cycles, as many as possible. So if you've got 5 million worth of property here, and it goes to 10 million, and then it goes stagnant or goes to that, and then it goes to 20 million. You just keep holding properties for as long as you can. That's the key, and that's what I've learned. But yeah, I guess the statement with 5 years growth, what's the last 5 years of growth been like? If you were to buy property in Sydney in 2013, but the previous 5 years to that didn't do anything. So the last 5 years there didn't indicate what was happening in the next 5 years. And that's the same thing happened with, Queensland in the mid-2000s. And same thing happened with Adelaide and other markets as well. Usually after a stagnant period of growth of 5 to 7 years, and it's, depending on what's happening in the market, interest rates and demand and all that kind of stuff like that, then a property market will go through a cycle. So you obviously don't want to be buying at the top of the market. If it's obviously okay to buy depending for investment purposes, but I guess the point is you want to catch as much growth as quickly as possible. So within Australia, there's lots of different property markets, there's different states, and they're all doing different things at different times. So I guess what I try to do is time the market as best as possible and carry as many properties through a cycle as possible. So I know this is there's a lot more information to this in terms of market cycles and looking at the last 5 years of growth. It does indicate some things, and there's lots of other factors to factor in when you're looking for an investment property. But I guess this is a common question that people ask me: what's the 5 years of growth been like? And I guess it's something that basically overall, past doesn't always predict the future. So overall, in terms of if you're looking at property on a long-term scale of 30, 10, 20, 30, 40 years, market cycles and all that kind of stuff, there is a pattern. But in only 5 years, when you're only looking at 5 years only, I don't recommend, that's the best thing to be focusing on, just the last 5 years of growth. So yeah, thanks for watching guys, and I'll catch you next video. Bye.